The number one reason people are often afraid to apply for a mortgage is the fear of denial. Hello everyone, and welcome to my channel where we explore all things related to mortgages and personal finances. Today we're tackling this topic so you can feel empowered to navigate through the process with confidence. My name is Dianne Ayala Steffey. I am a mortgage loan expert. I work with clients to first educate them on the various financing options available to them. Understanding the most common reasons for mortgage loan denial will help you avoid potential pitfalls and increase your chances of securing that dream home. So grab a pen and paper as we dive into the top reasons why mortgage loan applications get denied. The first step to completely eliminate the fear of denial is the pre-approval step. This is extremely important because this addresses all the different obstacles that may occur in your particular loan. So let's look at the various criteria that we look at when we get a pre-approval. We're going to look at your income, we're going to look at your credit, and then we're going to look at the amount of monies that you have set aside. So the first thing is we're going to look at your income. Is your income enough or justified to pay your mortgage plus your outstanding debts, revolving and installment debt for that particular purchase price that you're looking to purchase? Let's look at your credit. How are your credit scores? Do you have at least a 580 or better credit score? And if so, what are some of the outstanding items that may prevent you from getting a home? For example, do you have collections in excess of $2,000? Do you have collections that are not medical? Do you have any disputed accounts that are at least $1,000 or more? So we're going to look at your credit to see if there's anything that we can do to help you to improve your scores or to ensure that it does fit into your debt to income ratio. Also, we're going to look at your down payment. Do you have money set aside for that? Or is your credit score good enough to where you can get a down payment assistance for the type of credit score that you have, plus the amount that you're wanting to buy in the area that you want to buy? So there are a number of criteria that we look at that's extremely important. So trust in me, I would love to be able to help you to see whether you qualify to get pre-approved to purchase your home loan. It's not all that scary, but it does take a bit of time to get that process done. So in order to determine whether you have good enough income, we're going to look at your 1 month of your most recent paycheck stubs. We're going to look at the type of income that you earn. Are you on salary, or do you work 40 hours, or are you a variable income? Do you work based on commission only? We're going to look at the type of income that you have to justify the debt to income ratio. We also want to make sure that you have a good 2-year solid work history. That's extremely important. In the past few months, I have seen where people, or actually potential buyers or borrowers, have problems in this area. And just to give you an insight, I had one client who had 9 part-time jobs in the past 2 years. It was horrible, but we were able to get through it. But we need to make sure that you have a solid 2-year work history in order for you to qualify for a home loan. What is the buyer's loan type? Loan types such as FHA, VA, USDA, conventional financing. Listing agents think that some of these types are easier than others, such as conventional financing is an easier product because the appraisal has less stringent or less contingencies on that particular type of loan versus an FHA or a VA where the appraiser will identify certain things that need to be fixed before they give full value on that particular home. Has a buyer been pre-approved or pre-qualified? There is a distinction between the two. Under pre-approval, your loan has been through the desktop underwriting system. You have looked at all the paycheck stubs, the bank amounts, the credit report, everything on that particular loan. Whereas a pre-qualified, you're only looking at credit only. You haven't verified the income. You haven't looked at their bank statements. You haven't done anything but looked at just the credit application. You always want, as a listing agent, you want to make sure that the loan has been pre-approved. That's a stronger value. That's a stronger approval than pre-qualified. Are there any contingencies in the offer, meaning that if they have an existing home, will the borrower have to sell that particular property in order to qualify to purchase the home that they're making an offer on? Another type of contingency would be the work contingency, meaning that if a person just got offered a new job and they have an offer letter that has certain contingencies on it, whether they have to go through drug testing or if they have to go through anything else in order to qualify for that particular employment. That is a contingency that a listing agent should be asking about. Another is, how reliable is the lender? Has the lender been in business a long time? Is the lender a direct lender, meaning are they a direct lender to Fannie, Freddie, or Ginnie Mae? Because if they're not, that means they're a mortgage broker and they have different lenders that they go through in order to get that loan placed. That could be a detriment to the buyer in that we're waiting on another entity to approve the loan. Is there a problem with the DTI? Is there a problem with getting a credit score rescored? Is there a problem with having to do with removing a dispute off of a credit report, or any other items that may adversely impact the loan from getting full approval and meeting a closing date? Estimated timeline for loan approval and closing. So the number of days for financing under the third-party financing addendum needs to be reasonable. So that's a question the listing agent needs to talk to the lender about, to whether that particular days are reasonable to get full loan approval. And closing, whether there's a problem with closing on that particular date. You need to be sure that you have your dates for closing reasonably done or reasonably set, so that way you anticipate for holidays, you anticipate for the seller being out of town possibly, or even the buyer being out of town. So those are questions that the listing agent should ask. Furthermore, can the lender provide a pre-approval, a true pre-approval letter to that offer? So you want to make sure that the lender has gone through the full process of getting that loan approved, either by reviewing the income/asset documentation in order to issue out that pre-approval letter. Getting over the worry of loan denial means taking action to educate yourself about how mortgages work, learning what lenders want to see, and finding ways to make your finances stronger. Getting advice from a trusted mortgage expert or reputable lender can provide valuable insights and help you move forward with confidence. Call me today at 210-831-8749 and let's take that first step together. Thank you for watching. Stay financially savvy.